So there's a couple things happening here. One, this is possibly a major trend reversal that's happening. So we had this big gap down, and even prior to that gap down, we were in a bit of a bear trend. So we've been in this sort of bear phase the last from Friday to today, and treat this gap down as one large bear bar. All right, so one big bear bar, bear trend. And now what the market is trying to do is trying to create a double bottom, a higher low double bottom. So here's the low, and then these lows are finding a double bottom that's higher than this low. So it's possibly a major trend reversal, and it's reversing that bear trend that we're in. So one idea for that would be buying above this bull bar here. Now, if you're buying above this bull bar, let's think about where we need to put our stop and what kind of profit we need to go for. Are we scalping or are we swinging? Well, if it's been in a bear trend, and then now we're possibly finding the bottom of that bear trend, and then we're possibly reversing up, we want to take more advantage of that larger move up that might happen if this trend is reversing. So we would want to do more of a swing trade up. Also, this trends take a while to end. They continue even with this possible pattern we're having where we have a low and then this higher low double bottom. Right, we still really haven't had much of a breakout, and we've only been above the moving average just a little bit here. So the odds of this trend reversing here at this point are low. So if you buy above this bar, it's okay to do, but you need to be going for a swing trade. And in fact, 2 times your risk probably isn't enough. Well, maybe something like 5 times based on this context. So if you're buying above that bull bar, you want to be going for a larger swing trade up to offset the lower probability. So that's kind of one thing that's jumping out to me. Another thing is we're in a wedge right now, we're in a triangle. All right, so a triangle, it's converging trend lines. So we have this trend line moving down and this trend line moving up. And I like to avoid trading when there's a triangle. And the reason is because you get these tight trading ranges in it, like here and here. And then also once the breakout happens, so let's say the market breaks out up. Well, the first breakout usually fails and reverses back to the apex of the triangle. So the apex is where they meet. If it breaks out up, it usually comes back and tests that apex first before either continuing to break up or reverse down. So when I'm seeing a triangle, I like to more avoid trades because it's just so unclear what's going to happen next. Around this point in the day, I was starting to notice that we might be forming a bit of a triangle. So I was looking at it like this, right? High, lower high, and then a couple more highs right through here, and then low, and then a couple lower highs, a couple higher lows through here. And then we see that there's that apex, then the breakout, and then this breakout didn't just continue up. Most of these breakouts reverse back to at least touch the apex, which it did here. And then this triangle just keeps expanding and expanding. So we're at a point now where really we have a new triangle. Now if it breaks out of this larger triangle, we would still expect it to come back and test this apex. That's kind of the larger pattern that's at play. Now some trades I was thinking about today. First off, I was looking at this on the open. I was looking at this being a wedge here. Now, there's actually a couple different wedges here that we'll talk about, but one, it's not a perfect looking wedge, but it is 3 pushes down. So first push, and then this is kind of an odd case where the high went above the prior high and the low was above the prior low. But this still is the second push, and this is the third push. So we do have 3 pushes, even though it doesn't look like the typical wedge pattern. So 3 pushes, then a strong bull bar. And following these first 2 bull bars. So people were buying the close on the second bull bar, stop below, and they're holding long through all this. And the bears have made these 3 pushes down, and they're failing. I'm getting a good bull bar with room to the moving average. I would expect there to be at least a little bit more up after that bull bar there. Another wedge that's also not a perfect looking wedge is here. So first push, then second push, then on this low went below this low here before making that third push up. So once again, not a perfect wedge. In fact, you kind of get this broadening look. So it's kind of like the triangles we were drawing over here. Instead of being a triangle with contracting trends, this is more like an expanding triangle or a broadening triangle. Either way, I'm seeing this as a wedge here, meaning that either selling here or selling below this bar are okay. Because after a wedge, we're expecting there to be at least a few bars sideways to down. I think probably selling here, if you sell below this bar, your risk is more compared to this, because you have to put your stop either here or up here. So you're risking more, but I think your probability is higher. So I think this first trade, you need to do more of a swing, and try to get out down here somewhere or more. But also with this second one, you could still swing trade it, or I think you could do more of a scalp, because I think the odds are higher at this point that you're going to be going lower. A pattern that you'll see sometimes, I don't think we've seen it in a bit, but we might start seeing it more often, is that when there's a big gap down and a test of the moving average, this might end up being the high of the day. So we have a wedge on the open, testing the moving average, and then instead of the market going sideways like it has here, when you see this, it will end up breaking down below and becoming a bear trend, and then going for some sort of measured move, something like that. So when I'm looking at these cells up here, that's why this is okay for. That's why these are okay for swing trades, because this might be the high of the day, and then we're going to have a 100-point drop. So you're not going to win that trade all that often, but when you do, you have a huge, you can have a huge day. I feel like this is something we haven't seen too much lately, but I've seen this a lot in the past. So, and I say we might see more of it just because now that this pattern's come up, the market's kind of cyclical. Like you'll see certain things happen, and you get used to that, and then they disappear, and they come back a few weeks, few months later. And so just because I've seen this now, to me that means like we might be kind of switching to something different, and we might see more of this kind of pattern. And when you see this pattern, gap down, wedge on the open, oftentimes you will get a large swing down and a big bear day. So that's kind of something interesting, and to keep an eye out. So keeping that in mind, that we're probably in more of a bearish move, pullback, bear bar. So moving down, pullback, bear bar, probably reasonable to sell below that for a scalp or for a swing. As we're moving up, this is our major high up here. So until we get actually above that, then we should still be in either a trading range or bearish. And what do we have here? 3 pushes, first, second, and third. So we're going to be running into some sellers here and some buyers exiting below a bear bar. Maybe this first one. I think if you're selling this first one, you definitely need to swing, because you're selling actually above the moving average now. below a bar with kind of a decent tail on the bottom. And it's following these two bull bars, so there might be a second leg up. So if you're selling here, probability's not too great, so you need to go for a swing trade. Looks like you would have been, if you went for 2 times your risk, you would have been fine. You would have gotten out at the bottom down here. I think you also could have sold below this bear bar here. These two trades are similar to these two trades. The first one is lower probability, but there's more reward if you do take it. Whereas the second one is higher probability, but your risk is greater and the reward is less. I think the first one you need to swing trade. The second one you can swing trade or scalp. So you can go for a swing trade and bet on breakout down to the open of the day, or it'd also be reasonable just to sell and try to get out at these lows down here. And then keeping on with the idea that this is in a bear move here, I think probably looking for a short here would be reasonable. Selling here, trying to test to the open, or once again, betting on there being a larger move down. Either would be okay. Would have gotten stopped out. And then now we're kind of at the point where we started in the video. Market is trying to break out up here. And until it goes above this high or below this low, then we're in a trading range. And also, we have this triangle, so the first breakout is likely to reverse back to the middle of this triangle. And at that point, once it does that, then we're just back in this trading range. So to me, until we actually get above this high or below this low and then get follow through, then I would expect us to continue this trading range like we've had it. Looking at the daily chart, I was surprised to see this big gap down, and apparently this was at least in part due to the DeepSeek, the Chinese AI app, and that it's number 1 on the App Store now. So this is kind of a sudden shock to the market. So, not sure what the fundamentals are going to be with that and how it's going to impact the market going forward. But the technicals, the market's fallen down to almost the midpoint of this move up. And it's also now back clearly within the middle of this range. So we can still have big days this week. Like it might want to try to test this low of Friday, or might want to try to close these gaps on the downside. I'm not sure. We can still have big days, but I think in general, we're probably still going to be in a trading range. So thinking about like a couple weeks out, we've been in this trading range for a few weeks now. We're probably still going to have a couple more weeks being within this range. Like I said, not saying we can't have a big day where it tests up or big sell off down to the bottom. Either way, I think we're still going to be within this range for a few days. So I think some people will be taking a small position. They'll be buying lower and buying more lower, betting that a breakout would not succeed, and that'd be selling higher. Like selling above today, selling more higher in the range, betting that a breakout up would not succeed. So looking back at the 5-minute chart, decently large bull bar here. Now, will this have more buyers or sellers above it? My guess is that it would have more sellers because of the wedge and how it needs to come back and test the apex first. And then also we're just getting up more into the top half of the range. So, this could try to reverse back now, or it might have a couple more bars up, and then maybe 10 bars later come back and test this apex. So either way, I'm not interested in buying there, because I think the odds are low. I think it could be a profitable trade going for a swing trade up, but I think the odds are low, and to me the odds are it's on the edge. I'm not sure how much of an edge there would be trying to buy above that. the argument that we have this double bottom, higher low, that's reasonable, but it's also following a big gap down, and essentially on this chart, what we're looking at is a bear trend. So if you're buying higher up in the range in what is in a larger bear trend. So I'd rather not buy above that. In fact, I would rather trade small and try to probably trade very small and try to sell, and then sell higher again if needed. And like we've been talking about with the daily chart, we're in this larger trading range, so we're getting up higher. If we go higher than this, then we're getting up higher into the trading range. And I think other people will also be doing that on the daily chart, is selling above bars and selling as you get higher than range. So I would rather avoid buying above that bar. So a bit of a surprisingly large bar here. And I think we'll get a little bit more up after this, because we've had 3 bars here, basically breaking out of this. We'll probably get a little bit more up, but I think what's going to overrule this breakout attempt is that we are getting high up in the range. And a few things are going to work against this. We're high up in the range, we're in a larger bear trend, and the apex of this triangle is still below. So I think people are buying into this are going to struggle to make money, and I think more likely it'll fail to break out above this and try to test lower. Even if it does make its way up a bit in the last couple hours here today, I think tomorrow we'd be looking at it testing back down to this kind of 6,020 area where this apex of this triangle has formed. So that's kind of something interesting to continue to monitor. That's all I have today, guys. Thank you for watching, and let's have a good week. See you next time.